All right, so it's been a while since I made my last video. What everyone is talking about, the GameStop situation. I know there's been a lot of talk in the headlines right now saying that it's the Wall Street bets that's really driving the stock prices. There is the short squeeze currently taking place. So I spent a little bit more time looking into what's good stock. What I found was something probably different from what's really in the mainstream media, as well as a lot of I guess YouTube channels are really talking about. So I actually went into Morningstar and I looked. 80% of the ownership in GameStop is actually institutional. If retail customers don't even have as much ownership, I seriously doubt how much of the daily trading volume is really generated by retail investors, right? I remember seeing the total number of shares floating in the market was around 27 million shares. All of a sudden today it became 51 million. I think that's another red flag. Somebody was dumping shares out in marketplace, and because there was so much trading volume, despite introducing more shares, the stock price still increased. So over the past couple of trading days, the daily trading volume has been around 180 to 190 million shares per day. And given the current short interest outstanding, it only represents about 30% of the daily volume. And with that kind of liquidity in the market and so many shares exchanged hands throughout the day, it is not a short squeeze. So most of the movement is really driven by the trading activity. I went into Google Finance and I pulled GameStop's daily closing prices as well as daily trading volume. I ran a simple regression test, and what I found was the past 6 months price versus volume correlation is around 80%, and the correlation between the changing price and changing volume explains about around 58%. Then I've shortened my time period to the past week, and the correlation is much stronger. It's at 93 and 86%. So basically, this proves my theory, which is the recent increase in price is really not due to the so-called short squeeze. It was really just people kind of pumping prices up. And because of so many shares being exchanged hands over the past couple of days, whoever was holding these shares, they were able to actually dump a lot of their shares along the way. I don't believe benefited the so-called individual investors, just based on the overall sentiment. Right now, the people who are holding the bags are the retail investors. The previous famous short squeeze took place back in 2008 when Porsche was trying to take over Volkswagen. So I ran the same exercise. The findings are completely different from what is happening to GameStop. Even though the correlation was very small, what I found was a negative correlation between price and volume. And if you really think about it, that makes a lot of sense, because the definition of a short squeeze is a lack of available shares in the marketplace, which would cause a panic buying. Since GameStop's stock price and volume have a 90% correlation, that is not what is happening today. I think there might be something more to it. Obviously, that you can just say that I'm trying to create a conspiracy theory. The name GameStop might have a little bit deeper meaning, because what is the actual game, and who is playing who in this scenario? Based off of my findings, I am leaning towards the retail investors being played. My recommendation is just be careful. The stock price and trading volume, which is already almost 4 times the shares available, how much higher can daily volume go, right? Once the daily volume drops, I would expect the price of the stock also drop as well. A short squeeze usually would couple with a negative correlation between stock price and volume. This is my short video after a very long layoff. Hopefully this video was able to present a different perspective and of some help to you. Take care, good luck. Just don't lose everything over something as crazy as this. All right, take care.